Because what's happening in America is that the very wealthy have access to investment opportunities that those of us who aren't uber wealthy, but just, have been fairly successful and worked hard, we don't have access to this. So the rich, the really rich, are investing in things that and we're considered rich, and I'm sorry, but we're not rich in New York City. I didn't consider myself rich because it's so expensive and taxes are ridiculous. We're the ones paying all the taxes. Politicians talk about 75% taxes on the wealthy, all this kind of stuff. And here the problem is that those people that they're talking about, that the 1%, they're not paying taxes. I know, because I'm not.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and each week we interview a real estate investor, mover and shaker, or expert in the industry. And today we have Holly Williams. She is a multifamily real estate investor, syndicator, and founder of MQ Ventures out in New York City. She's also a regular guest on many top podcasts, such as The Best Ever Show with Joe Fairless, The Real Estate Syndication Show, as well as being a contributing author on Forbes.com and Bigger Pockets. Holly, thank you so much for joining us on the show, and how are you?
Oh, I'm doing great. It's so good to be here. I'm in California right now, and everybody's always happy in California.
Absolutely. I'm a little jealous. I'm here in Connecticut, even though it's the summertime. It's not so bad, but yeah, it's not so bad being in sunny California. So hats off to you being over there, and I hope you're enjoying your trip there.
My husband tells me it's hot as hell. So
absolutely. Yeah, it definitely is. So. Well, we talked a little bit pre-show, and you have a very interesting background. And I think one thing that was very interesting, which a lot of our listeners is business executives. And your story of being a business executive going over to a full-time real estate investor is pretty intriguing. Would you mind sharing for us your background story and kind of your journey and kind of your current focus?
Sure. So I'm 58 years old. I look 30, it's a curse, but however, and I feel 30 actually. But what happened was I was moving along in a career in advertising, and not a bad thing. But I found myself paying a ton of taxes, like a ton of taxes. And people say, it's because you're making money and blah, blah, blah. But, here's the deal. If you're paying 50% of what you make in taxes, and the roads are terrible, and the airports are terrible, and there's 65,000 homeless people. It started to piss me off, frankly. So that was the first thing that happened. The second thing that happened was I was given an opportunity. I knew a young man who I thought was really super smart, and we were both on a board together. I'm from Texas. He's from Texas, and his name is actually Joe Fairless. You mentioned him, and so he called me one day and he said, Holly, and let me back up a minute. I knew about real estate. It's just a lot of work. And we have a 4-family house in Brooklyn. I have a couple of single-family homes I've bought and sold. So, I understood the benefits of real estate, but I was still paying taxes. I was buying REITs. I thought that was all you could do passively. So, because we're stuck in the stock market, that's all we know, right? Because that's all anybody ever talks about, especially in New York. So, and to do anything else, you really have to know people, and I didn't know anybody. So anyway, he called me one day and said he was going to start buying apartment complexes, and he was going to hire a mentor and all this stuff. And I said, okay, that's a great thing. Go for it. And so he did, and he called me a couple months later and said, I found an apartment complex. And I honestly, I know how to read a balance sheet. I know how to read, P&Ls and all that, and it looked okay. I didn't really understand it. There are levels of understanding with this type of investment I have come to realize. But I invested in his first deal mostly because I trusted him and I wanted to help him get started. So that went okay. And then the next couple of months later, he called me. He said, listen, I found this guy. I got a partner, blah, blah, blah. They know what they're doing, blah, blah, blah. And, can you help me raise $1 million? Because I don't, you know a lot of rich people. So I said, sure. How hard could that be? Right? So I called some of my, you live in New York City and you're over 35 or 40 years old, you're living in anything but a third floor walk-up. You're an accredited investor. Only I didn't even know what that was. Right? So, and I had saved and lived below my means and all the stuff you're supposed to do. I got a financial advisor, all the stuff that you're supposed to do. So I said, I went down there to Houston and I looked at blah, blah, blah. And, I invested in it and I started calling people and I said, and they were like, Holly, listen, we'll buy advertising from you. If you want a job, you got to do whatever. But, I lost the money in a land deal one time and real estate's too slow and all the things that, the stock market is fast and loose and these, venture capital people want to invest in 10 companies and 9 of them lose and 1 of them hits and they want to get involved with. So this is very pedestrian because what this investment is all about is slow and steady income, huge tax benefits, no work. And, if you do it right, you can, it's unbelievable what it's done for me and it's changed my life. So I didn't raise $1 million. I can only raise, a fraction of that. And I put a lot of money into the first deal to help Joe and to, because I do what I say I'm going to do. And that's when I really found the massive tax savings that this stuff can do. So I gradually over the next 6 years, 5 years, moved money out of the stock market that by the way, I was paying all these capital gains on because, these guys buy and sell this stuff and you and I are paying for it, but we don't know that. They tell us it's a no load fund. And, we get these 1099s. Oh, I made $10,000. But when I started making like $60,000 and I owed $25,000 in capital gains, it started to piss me off also.
Wow.
So it was largely about taxes. And then I watched my parents have to withdraw from the stock market to live. And they died in 2010, 2011 when it was down, even though they had been in quote unquote safe things. You have to sell the goose to get the eggs with the stock market. And so if you have to sell when it's down, and you do have to sell because you cannot live on 4% or whatever it is, it's ridiculous what they tell you to do. And, I watched their wealth, what little wealth they had, go to just about nothing. And it was a close call, right? So that's kind of what happened kind of all at the same time. I discovered multifamily, and through the years, through the next 6 years, I invested probably, $500,000 or so in the stock market. But what happened was in multifamily, and that was savings that I had for retirement, right? And because I've come to believe that this is absolutely the safest investment if you do it right. So you have to look for syndicators and teams and get involved with them and get to know them, because there are some really particular criteria that I look for. And when I find that, I get involved, I get to know the syndicators, and I secret shop markets, I run the numbers through models, and then I invest in it and I offer the opportunity to people that normally would not have that. Because what's happening in America is that the very wealthy have access to investment opportunities that those of us who aren't uber wealthy, but just, have been fairly successful and worked hard, we don't have access to this. So the rich, the really rich, are investing in things that and we're considered rich, and I'm sorry, but we're not rich in New York City. I didn't consider myself rich because it's so expensive and taxes are ridiculous. We're the ones paying all the taxes. Politicians talk about 75% taxes on the wealthy, all this kind of stuff. And here the problem is that those people that they're talking about, that the 1%, they're not paying taxes. I know because I'm not now. And legally not. I learned all of this through multifamily. So it's changed my life. I share it, and that's what keepmore.com is all about. It's about investing opportunities and providing access to things that I am doing and to people I know. And that's what the SEC, you have to know to get in the club. You have to know people. So I want to know people, and I want to share what I've come to believe and what it's and actually the facts of what it's done in my life. So that's what keepmore.com is all about. That's what I'm all about. And it got to the point where it really didn't make sense to stay in advertising, and it didn't make sense. I was much more passionate about this than I was in market research and that sort of thing. And that's a great background for this, because market research is all about, and advertising effectiveness and all that. It's all about patterns in demographics. So I focus on where populations are growing and specifically overlooked market segments like working Americans. So that's kind of my story, and I love it. I love it, and I've changed some. It's been able to change some of the people I really love's lives too, and that's been amazing.
Wow. Yeah, you said a lot of points that I would love to unpack. And the one that kind of particularly jumped out to me is that regarding people's notion of they work hard, they invest in the stock market or the financial markets or other types of low yielding investments or stuff that doesn't have any tax benefits. And that's kind of a big thing that kind of kicked me in the butt as a real estate broker. Whatever my earned income, I'm paying tons of taxes, and I can hear the crying from over there. You living in New York, I'm living here in Connecticut, is almost just as worse. But that's a lot of the conversations that I'm having with a lot of the business executives turned real estate investor on the passive side. That's kind of their biggest thing. And then your concept of keep more is really essential. But my next question will be, is you kind of got into it through, meeting Joe and other type of similar investors. How does kind of like a business executive that's listening on the show are able to find the Joe Fairless or the Holly Williams of the world and enable to them to transform their mindset and to, transform their earned income over to passive income and focus more on that?
Right. That's a great question, because I feel very fortunate, and just a lot of the large deals with people, I feel fortunate that I've got those relationships, and I know I've learned over the years, I know what a good deal is, and I know here's my lane. And how people get involved, is you really have to network. You can go to my site, of course, and that's really what I do. It's education. Right. And because if you're an accredited investor or even close to an accredited investor for some things, if you're a sophisticated investor, those are a few of them. I do, that's what I do. I do the due diligence, and I work with people I know, and I have a track record of doing okay. And, that's what you do. If you're listening to this podcast, you are on the right track, right? And I think that that's part of the challenge, is that people think it's a REIT. There's a big difference between debt investing and equity investing. And with the stock market, for the most part, you're investing in the debt, and somebody else is getting all the equity benefits of it. And so we're conditioned to believe that our 10% or so average returns are good, and they're horrible. And they're horrible. And so we're listening to our financial advisors. My financial advisor said to me, and I quote, "Holly, you're making a big mistake," when I started taking money from his thing. So, it's about what we're conditioned. And don't get me wrong, I've made money in the stock market. And the stock market is not a bad thing. And I don't think that the people that are involved in Wall Street, I don't think they come to work and go, "We're going to just screw people over." But the challenge is that it's up and it's down, it's up and it's down. And if it's down when you need the money, you're hosed. Mm-hmm. And you can't time it. And people like Warren Buffett, they're not going into their Fidelity account and buying mutual funds. You see, they say, "Don't sell, don't sell, don't sell," but they're investing in real estate, and they're not. He's even said it. I don't pay taxes. I pay. My rate is lower. Well, wait a minute. Let's just think about that for a minute. How is his rate lower? His rate is lower because he's not selling, because he's making the market. He's telling you not to sell. So when you don't sell, the stock stays up and he makes more money. And that's not a bad thing. And he tells you this, but he's investing in real estate. He just bought a real estate brokerage and all that. So I can tell you right now that most, not all, and I haven't seen their tax returns, but you noticed that when everybody was talking about Jared Kushner not paying taxes, right? That conversation had died down very quickly. And the reason is because our lawmakers incentivize things, and honestly, they're making laws that are benefiting themselves. And would everybody agree with that? Would you agree with that?
Oh yeah, absolutely.
Right. And so this is just my experience that I share, and so I have a lot of experience. And at the end of the day, this is a business, right? And so you want to work with people who have run businesses, who know how to execute a business plan. And I'll talk in a minute about what kind of deals, what I specifically look for. But if you're listening to this podcast, to get into the club, you network with the people that you like and that you hear and that makes sense, and you'd learn more. Mm-hmm. So hogs get slaughtered.
Yeah, absolutely.
What happens is that when you start getting to be a hog, so I don't want to be a hog, because I just want to make money to pay my, to live and provide, not for my daughter to not have to go through what I went through with my parents, because they were both expired because they died at the wrong time. And they were paying taxes like crazy because of all this tax, especially in an IRA, and that's a whole other conversation. The government doesn't want you to know that you can use your IRA for investments either, but all of that is taxed as regular income, and then you're paying. It's just, forget it. I mean, it's just crazy what we do. And then if you need help when you're older, which most people do, you either go to an old folks home, which is expensive. They want your assets, or you pay somebody to take care of you, and that's expensive. I mean, it's very expensive. So, that's what happens when we get old. Mm-hmm. And if you don't believe that, tell me another way that it's happened.
Yeah.
Right? And so when you're talking about retirement, what the stock market, with all these ads say, they show you on the boat, and I'm living the life at in Florida, active, going to all these clubs and, blah, 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 and, riding bikes. But when you get, if you're lucky, you get old and you can't do that stuff. So I want to help people design a life that they love and can and that they're in control of. And the only way that I found that, and I want to share it.
Sounds good. So kind of transitioning, we kind of touched on the end part of your point there, as far as like the properties that you invest in. I know that we kind of talked briefly pre-show that you're heavily invested in Texas, and you also have some other investments in different markets and looking at other areas as well. So what markets are you currently in? What markets do you like, and kind of what are the characteristics that someone should be looking for?
So I invest in the markets that are cash flowing now. So I invest in, I'm out in California, right? And I have not, and most of the real pros that I know out here cannot make the numbers work. So you either invest for appreciation or you invest for cash flow.
Right.
And it's very difficult to do both. And if you look at Texas, it's slow and steady, right? But you can still go and buy. So if you go to any of these garden style apartment complexes, and so we work in Texas, I've got a couple of projects that we've done in the Carolinas. I love the Carolinas. One in Jacksonville, Florida. I love that market as well. So these are markets that people are moving to, first of all. You've got to look at the migration patterns in the country. And, you also have to look at most Americans. I mean, half the country has a household income of $30,000 or less. So all the new construction is Class A luxury stuff. And what people are not building are Class B apartments that the LVN can afford and the security guard can afford and the McDonald's manager can afford. And these are households that make $40,000 to $50,000 a year, whatever. They're not going to buy a $500,000 house typically. Now I'm just talking generally kind of the average. And it's quite clear to me that, and then they don't, when the economy tanks, the Class A has to downgrade, and then the C and D, they don't really have a safety net. So that's unfortunate. But when it's good, they upgrade to Class B. So that's kind of what I do. And the criteria that I'm this is really my criteria. Class B, in a growing market, investor split 70-30 in favor of the LP, 8% preferred returns, already cash flowing, already stabilized with a loan that makes sense. Because the other thing is you can't have a loan that you have to get out of at the wrong time. So Correct. You need, a 10-year is the best. With commercial real estate, you need at least some options to extend a loan. But I don't really. I've done it personally and invested in some things, and I've put my investors in that really understand that it's a crapshoot where it's not stabilized. You have to throw out deadbeat tenants. It's a mess, and it's not cash flowing immediately. So I want that 8% preferred return immediately, because at the end of the year, with most of these things, with the way the tax code works, you may have cash in your pocket, but what you get is a paper loss. So essentially, you are deferring taxes on money that you make, and it's very, very powerful. And then what I like to do too is try to roll that over if the group wants to do is like-minded, which that's only who I work with, or like-minded groups. Roll that over into another project and continue to defer taxes. If my parents had done that, if they'd taken $400,000 that they had to begin with and put it into multifamily, when they died, they would have at least had twice that, and wouldn't have had to sell the goose. So that's what I want to do with my daughter, and so that's my plan, and I also am in stock still and all of those things, but it's just, to me, and also, you've got 30% equity and conservative underwriting. So if you've got a debt service coverage, of 1.5 or higher, 1.4 even, the banks want 1.25, the income that it's generating today before we even take control of the property, the income could go down 25% and it would still, you would not lose money, because so that to me is, I understand that. I understand the investment. I understand the people. I understand, the market dynamics, and I understand what these properties did in 2008. And most of them, not all, but most of these markets, rents in Class B apartments actually went up, and there was a housing shortage because people lost their homes and they needed a place to live.
Right.
So I want to do two things. I want to make working Americans' lives better by not being a hog that gets slaughtered, right? Because that's what's happening. We buy these things from hedge funds and REITs, and all they're doing is, well, not all they're doing. I don't want to say that everything's bad, but for the large part, they don't care about the little things. Well, we do the little things, and the little things make a big, big difference, like a carport for a covered parking. People will pay $100 more a month in Dallas. Well, for a covered parking spot. So if you've got 200 units and that money is going right to the bottom line, and you can do things like that and dramatically increase A, the standard of living, and B, the value of the property. So we force appreciation of those things. We take something that's making money now, and then we force appreciation by adding little things to it and raising the rent reasonably. And so we're doing two things. We're making life better for the working American, and then we're also making life better for those of the people, the other overlooked market segment, which are those people probably with a net worth of around $1 million to $5 million, something like that. Maybe not quite that much, but they're working, they're saving, they're successful, they're quote unquote rich by the government's definition, but not by mine, right? So that's the thing. Does that answer your question?
Absolutely. Yeah, definitely. It kind of veers me off to the other side, because now that we covered you kind of your criteria for the investment itself, what about on the joint venture or the sponsor side that you're working with? Is there a process that you go about? Of course, you said that you look for people that you trust, you listen to, that are experts in the field. But is there any kind of more tips that you can offer as far as kind of vetting, as far as investors going into a deal that you can recommend to us?
Sure. When you want experience, or one of the partners has to have a ton of experience, period. You want conservative underwriting, and then you want people who have run businesses before, or who have gone up the corporate ladder and understand a P&L, have managed people before. Because at the end of the day, this is a business.
Exactly.
This is not flipping houses, which is a great thing, but this is not, it's a different thing. You want someone and you want some people that have skin in the game themselves, and you want a group that investors are the main, because I'm an investor, right? So I want a group that if if they're not able to pay the preferred return, they don't take a management fee. I want people that aren't depending on, I don't know how to make this sound, but I want people that are diversified like I am. I mean, that I'm going to be okay, right? And so if you're in any of this for the money, you could tell when people are in it for the money really quickly. Yeah, I love money. Don't get me wrong. I love to make money. I have a nice life, all of those things, because you need money to do good things, right? But you can tell when somebody just flat out wants to get rich, and I run the other way.
Yeah, definitely good tips there. Yeah,
yeah, and I'm like, by how the deal's structured, right? Because if the deal is structured, well in favor, I mean, I don't want to. I want like 70-30, or whatever, pretty much, and I want an IRR of, high double digits before it's considered a success. And you can't find that anywhere in any other investment that I've found.
As far as like kind of like you mentioned a couple times your investor group, how did you kind of grow the group? And then kind of what are some things that you do to kind of maintain the relationships? I know maybe just you're out there in California meeting with investors and partners and stuff like that. But what are kind of like your way that you was able to grow your investor base and kind of some tips for the people that's listening?
Well, it's interesting that the people I know that invested with me early on were not the people I thought would. But I mean, I'm so grateful because just as I trusted Joe, a lot of people, it's a track record, right? And if they're not familiar with this type of investment, I spend time with them. I mean, I spend time. Most of them all of them. The SEC requires you to know them. So you can't invest with me unless I know you. And that's the law. That's what I mean. It's a club that they've designed where if you don't know somebody, you don't get in. So I spend a lot of time, and some of these, what's been really amazing is that I've had, friends that have said, Holly, I'm just doing this because of you and blah, blah, blah. And I'm like, yeah. And they call me later and go, especially after they've done their taxes, and they go, oh my God, you're right. This is, so, I've been able to change some lives also and help, and some of my friends have gotten out of advertising, frankly. So it's been a great thing.
Are you kind of more mixed with, other business executives like yourself, or real estate folks, or retirees? Do you have a good mix of that, or is more kind of business executives like yourself?
Mostly people like me who want to invest in real estate, but they just don't have the time. I mean, seriously, you really have to invest in a rental property. It's a lot of work. And and it's hard to do from afar. And if you're in a New York or an LA or a San Francisco, you can invest in ground up construction and that sort of thing, but you can also lose. And of course, that's where a lot of people, but I did, in 2008 or whatever, because you buy for appreciation and it's riskier, lots riskier. So a lot of people this is an alternative to the stock market. These are people that want to diversify. Financial advisors will tell you, oh, diversify. Well, what it means to them is like bond funds, some in this, some in that. You're in the stock market, like, world, and you can't get out. That's all. Think about that. We are told that that's the way to go, and we don't understand. I don't understand it. I thought I did. I understand, P&E ratios and all this kind of stuff, but I have no idea. It is all like Trump tweets, it goes up. Trump tweets again, it goes down. I mean, I don't understand Apple's business. I have an iPhone. I like an iPhone. A lot of people like iPhones, but I have no idea what their margins are. I have no idea what the trade deal is going to do or don't do, or even if it's even going to happen. There's so many variables that you're really just giving your money to people that your life savings.
That's
To
right.
people that will tell you that they don't know what's going to happen. And I can tell you exactly the risks, and I can tell you exactly what's happened. And it's really pretty simple, right? It really, really is pretty simple. And, the biggest challenge is that if you're successful, it's hard to not understand something. And then we're told that we understand it because we know how to do P&E ratios and look at stocks and sort by this and day trade and all this kind of stuff. And so we think we know it. But look at all the people that think they knew it and they lost their shirts.
Exactly.
So, but it's hard for people to admit that they don't know this. And then some people just think it's too good to be true and that it's risky. And so what I try to do is I just believe with all my heart that all of those things are not. Diversification is in this and storage units and maybe some mobile home parks, other things that I trust some people with, but really I think my money for my income to retire is in multifamily.
Yeah, the thing I really like that you kept saying is, like I said, the financial advisor doesn't really have an incentive for you to say, let's, go buy a, multifamily property. They want to keep you in, and they say diversification is going into other different types of financial investments. So, and then they can't even tell you where it's going to be ultimately at the end of the day. So for you, like I said, the key thing I kind of getting out of is, like I said, you constantly got to educate yourself. Multifamily in particular is something that it seems complex, but you can get a grasp on. You can learn it, you can understand it, you can know where the numbers is, you can kind of know where your future is going to head. So that's kind of the key important. Did any other additional education outside? I know you invested early into real estate and you kind of learn now, you're now an expert at it, but was there any other particular things that helped you kind of on your journey to kind of get more grasp on the numbers and the process of it to ultimately becoming very comfortable with it?
At the end of the day, it's a leap. Any kind of investment is a leap, right? And honestly, I've had investors go through the numbers. If you go through every single, you can find fault with everything. There's a difference between overanalyzing and being careless, right? So I look for a few things. Now, but yet we'll invest in a Vanguard mutual fund, right? And if you and you have to ask them specifically, only the summary of the terms and conditions or you can find on their website. You have to actually ask them to send you the terms and conditions of a mutual fund. So when you're talking about risk, just get one of those and read it. So if you can analyze till the cows come home, like we say in the South, right? But
That's right.
At the end of the day, everything's a leap and you just have to do it. But do it, with people that you get a good, that have a like-minded interest. And when I say like-minded, there are lots of investors that don't care about this. I mean, lots of investors just want to make a boatload of money and they want to take risks and all of those things, and that's okay too. This is not that. You're not going to get rich quick. You're going to get rich slow, though, I guarantee you. So yeah, it's like-minded people with like-minded goals, and those are people largely like me who are hardworking. They've got real jobs. They want to diversify, but they don't know how to do that. I mean, I told my CPA, and they're paying a boatload of taxes and are tired of writing checks to the IRS. I thought any CPA will tell you, listen, if you know and trust the people and it looks good, do it. Any financial advisor will say, run. You're making a big mistake. That's what mine said. He told me 6 years ago, he said, Holly, you're making a big mistake. You know that, right?
Mm.
So, it's, that's what we're dealing with. And it's not because they're bad people. It's just that they don't understand. They don't know, because that's not what they do, and that's not what their job is. Their job is the stock market.
That's right. Yeah, the thing I like that you're constantly, like doing the podcast, and it's going to reach so many people, educating people, and it just seemed like you just want to help people understand and share what you know and share all the benefits, because more people that get involved and kind of wake up to the fact that, the financial markets is not the only way, and that, the taxes and all the other different stuff that kind of dragging people down, and kind of become more aware of. And then you're out there in California, just, talking to more people and touching more people. So can you kind of touch on, like, what's kind of like a typical holiday? Is it, you're out there talking to investors, you're looking at new deals, or you're traveling, looking at deals? What's kind of like a work day for you?
Well, work day is doing things like this, visiting with people that I like, taking phone calls from the beach. I've been able to design a life now where I can spend time with my daughter that I never had time to do. And just really being, present, right? And I will tell you that it's changed our lives, but my husband had to go to 3 CPAs before he was sure that this was legal. I mean, I've talked to some really high-powered, wealthy people that run large divisions of companies, and they're like, Holly, this is too good to be true. You're out there. This is no way. And, they call me 4 years later. Hey, tell me about this thing, right?
Right.
They see what's going on. They see what's happened. They see what's happened. So
I always ask,
I
always ask all of our guests kind of what's kind of if they have any particular morning routines. I like asking successful people. Do you have anything in particular that you do?
I wish I did. I'm serious. I got into multifamily because I didn't want to work this hard. I spent 35 years in advertising working my ass off. And, this hasn't worked for me. And that was the key, I got a coach. I really have found out that you have to design your life around what you want to do. It's early in the morning here, but my sweet spot's in the afternoon. So I get my daughter to school. I wish I could tell you that I got up at 6 a.m. and worked out and all this stuff. And I'll work out on a big bike ride or all of those things, but I rarely do it in the morning.
Well, you got that. Well, you have that cup of coffee, so that's one thing, right?
I drink coffee. I read. I still talk to great people. I mean, I'll wake up, but I don't really get going. And so, you know what? That's okay at this juncture. I'm okay with that. The whole idea is it's a life of abundance. The more you get, the more you give. I get all of that, and I believe it with all my heart. And I just wish I could be like a Tony Robbins that's super, I just can't be that energetic. I'm sorry.
Well, it kind of attests to your whole kind of putting this whole process together, from transitioning from executive to multifamily investor, where you get to choose whatever you like to do. You get more time with the family and your husband, and get to travel and meet and talk to new people. And so I think that's just a testament to all of the hard work and the focus that you did on this venture. And that's awesome.
Listen, I've got friends in LA. I've spent some time this week with good friends. And like I said, you have to know, your investors to do this. That's the thing. You have to know them. You have to, that's why my CPA, I said, why the hell didn't you tell me about this? And he said, because you can't get it. Private money versus public money.
Mm-hmm.
So if you're used to the stock market, or you're used to angel investing, or you're used to flipping a house and making $100,000, this isn't for you, but that flipping of that house and making $100,000 is going to be taxed as regular income. It's going to take you 6 months to fix the house, or at least a month. Maybe you do it a little bit, but then you're not going to make $100,000. You may, but you have to think about things just in terms of an 8% tax deferred thing is, my God, it's 12, 13, 14, 15, whatever. And then you got the back end, right? Because we force appreciation. So you can make amazing returns with much less risk than flipping a house. Or, I get wholesaling and all that stuff. I get it, man. You can make lots of money, and people do. It is also a ton of work.
Mm-hmm. Absolutely.
You got to make a business out of it. You really have to.
Absolutely.
You have to hustle, and it's about hustling with the things that you like to do. I mean, some people just like hands-on construction and all that kind of stuff, and that's good. That's cool. So this might be a diversification for them, but some of them just don't want to make that leap. They don't want to let somebody else handle things. But yet it's so funny they do that with these financial advisors in the stock market. It's just, I don't get it. I mean, but I do get it, because I was afraid too, and I didn't know about it. I thought I was the only one that didn't know about it, but I'm not.
Yeah, just so kind of concluding a little bit, you had mentioned your daughter and your husband and kind of your life. What would you say that you're most grateful for?
I would say that, right? It's amazing to be a mom. That's a beautiful thing. And I have a husband that is not like me, and I have to have something to do. I mean, I could just sit around and not do anything, and I don't want to do that, right? He could sit around, and he's a professional napper. He likes, if napping was an Olympic sport, my husband would be, a gold medalist. So, and that's okay too. We're okay with it. We've reached, so that's kind of, I think that's what I'm grateful for. And I'm also grateful for all of the people. I mean, I wouldn't be able to do this without my career, right? I mean, I know how to talk to people. I know how to, I am, when I find people right out of school, it's hard to get into this because they don't have business experience. So.
So how do I know that you have your website, but how do we get in touch with you, Holly?
Sure, Holly at keepmore.com. Go to my website, and I've got, connections to other people and that sort of thing. And Holly at keepmore.com, and we'll chat and we'll see what you want to do, and I can point you in the right direction if a multifamily investing isn't for you. I mean, you might want to take a lot of chances and go do some other stuff and make some money faster, and that's good. That's cool. So I know a lot of those people, and I respect them, and a lot of them invest in my deals, right? So they'll do it. They'll flip a house, make $100,000, and put 50 of it, in a multifamily so that it can stay safe before they do the next flip.
All right, awesome. Holly, it was really a pleasure to talk with you. Got a lot of nuggets, learned a lot of value to the listeners. Really appreciate it, and look forward to connecting with you again soon. Again, Holly at keepmore.com. Contact her, have a conversation with her, have a cup of coffee with her. And Holly,
got it.
Thank you so much again. Enjoy the rest of your day out there in sunny California. And hopefully one day I'll be able to join you out there on the beach.
Well, get on an airplane. They fly out here.
Will do. All right. Take care. Have a great day.
All day long. Thanks very much.
Take care. Bye-bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.